Ladies and gentlemen, welcome to another episode of the Mindful Investor Podcast Show. I'm the host, Steve Rosenberg, and the reason for this show is to obviously bring on investors that basically change the mindset of all the people out there and make you kind of stop and think and realize that investing comes in all shapes and sizes all over the country, all over the world. And when you think about being an investor, it's actually a pretty small group of people that we are in. There's really not many people out there that do what we do. I was on a podcast show or someone's meetup the other day, and I was talking about that, and he was explaining to me how he had so many people in his group. And when you think about the billions of people that live and all need a roof over their head, and the fact that there's not that many investors that actually own all of these properties, it kind of puts it into perspective of how small this group actually is. So even if we're a couple million people strong, it's really not that big when you put it into perspective of how many roofs are out there, that somebody owns those roofs for people to rent. And there's so many different ways that you can make money in real estate. So today I have a very special guest. My very good friend, Ashley Kehr, is on, and Ashley is the host of the BiggerPockets Real Estate Rookie podcast show on Facebook, and it's on Spotify and everywhere else that I think people can hear her amazing voice. But today we're going to talk about what she's doing, her background. You may have remember I was on her show with Joe Roberts, who was the Dream Investment Adventure winner, where Mynd donated $20,000 to help Joe, and then I coached Joe through the series. So if you haven't seen that series, I definitely recommend you go back and watch that, because I coached Joe from the beginning all the way through to him actually finding a property all in another state that he's never been to, never invested in, and he never actually leaves his house in North Carolina. So it's a great episode. Ashley was the host of the show, so she was interviewing me and Joe, and it really was a great episode for you to watch and learn how it can be done. So Ashley, first, thanks for being on the show. I appreciate it.
Yeah, thanks for having me. I got to give a little plug first. So if you guys want to listen to their BiggerPockets rookie episode, it's episode number 33. You can go to biggerpockets.com/rookie33.
Yeah, and BiggerPockets does a great job of helping investors, and the show that she does really, it definitely makes a difference for investors. So it's a great show. That, along with what we're doing at Mynd, helping people, it's really a great combination. I wish that when I first started out that these things existed for me, because they didn't exist. I hate to say it, YouTube didn't exist, just to give you a date timestamp of myself. But it just shows that how we've evolved as an industry, and how there's so much great information to really learn what successful people are doing. And, success leaves trails. So you don't have to figure out your own way now. You can just follow someone else's successful path, and you can walk along that journey with them to success. So, Ashley, tell everyone just kind of a little bit about yourself, where you're from, where you're investing, and kind of what you're doing today.
Yeah, so I invest outside of Buffalo, New York, in the rural areas. I'm the host of the BiggerPockets Real Estate Rookie podcast, and I just recently opened a liquor store. It's my first retail business. I have completed BRRRRs, just buy and hold rental properties. I've sold a couple of my rentals, did seller financing, but I haven't done any flips or anything like that. So pretty much just strictly buy and hold as of right now.
So Ashley, what is the first property that you invested in that got you like the investing bug? Like what was that first deal, and can you explain it a little bit?
Yeah, so actually it wasn't even my first deal. Is that I worked for an investor, and he involved me with the whole process of all of his acquisitions, his property management, and I basically ran all of that for him. I did his financing. And really the big point for me was when he went to buy an auto dealership. And with that auto dealership, he was pulling equity out of his rental properties to purchase in cash this auto dealership. And to me, that was just amazing how he didn't have, this amount of money in a bank account, but he was able to go and pull that out of his other assets and use that to buy another business. So that was really the eye-opening experience for me as to what real estate investing can do for you. It can just provide you a lot more opportunities.
That's interesting. So, a lot of people get into real estate because they want to get away from, maybe what they don't want. They don't want to have a job, or they need the money, or they don't have a retirement. Mine was being an airline pilot, and I wanted some safe, secure, for the horizon type years. But it's interesting because you saw this as an opportunity that you saw somebody basically pull out of nowhere by using the equity to go and buy more assets. And so and I know you're a numbers person, so you kind of saw this from that perspective. Is that right?
Yeah, that's correct. And I helped him analyze if this purchase was a good deal. On all of his acquisitions, I did that. So that really helped me learn how to run numbers. And then at the closing table, I was the one that wrote out these huge checks. He let me actually sign my name on these checks. And to me back then, it was like, oh my God, I was shaking. And that really added to the experience as to how much he involved me and to show me what I could do with all this stuff. And for me, I didn't really have any plans then as to, I need this amount of cash flow a month to retire. To me, it was I'm doing this every day anyways. So why not do it for myself too? So that was kind of how my mindset was at first. It was I'm doing property management day to day. I'm doing acquisitions. I know how to do that. I'm doing financing. I know how to do that. Why not do it for myself?
Interesting. So you kind of saw the results of it with someone else. It wasn't a lot of people, they get into real estate, sometimes because they lived in a house and they couldn't sell it. So now they're, an involuntary landlord. But you kind of saw the result of the checks being cut that you actually wrote. That's an interesting perspective, especially, a lot of people get so emotionally attached to the deal. It doesn't seem like you probably didn't have that challenge, because to you, it was all numbers and you saw the end result of what you could get if you kind of followed a recipe.
There were definitely properties I got attached to for sure.
Yeah. No, I'm just saying in the beginning, just the concept of getting into it, just the whole thought of why am I doing this? Well, let's talk about this. So I know you've done a lot of deals. What would you say is your best buy and hold that you've done? And kind of, can you explain why you consider it your best?
Okay. So this is a 4-unit building, 2 commercial in the downstairs, 2 residential in the upstairs. I bought a small portfolio from this guy who was an older investor, just needed to get out. He didn't really care for the properties over the years, so they kind of needed a lot of work. And at the time, I could only purchase, I think I did 7 of the properties. And there was this commercial unit and another duplex and a plot of land that I did not purchase. So and he wanted at that time $90,000, and it's a really small town. There was other vacant properties on the main street, and I just didn't know who would actually even want to rent it out, the commercial units. So a year and a half later, he approached me and said he would sell me the 4-unit and the duplex for $60,000. So in a year and a half, he dropped the price by $30,000. Well, I negotiated him down to $40,000 for the duplex and the 4-unit building. And there was one tenant at the time living in the 4-unit building in the upstairs. So what I did was I wholesaled the duplex that needed quite a bit of work too. So I wholesaled that for $20,000. So I got this 4-unit building for $20,000. And I spent all last winter rehabbing 3 of the 4 units. The tenant that lived there, we updated her plumbing and a couple things, but she wanted to stay and didn't want her rent raised, so we didn't really do any cosmetic updates in there. We completely rehabbed the other 3 units, and we put about $70,000 into it, and so we were $90,000 all in, and we just refinanced it, and we're able to pull out $100,000 with a private lender at 4.5% interest, amortized over 30 years. So it was a great deal anyways, but the fact that we were able to get that financing on it too made it even a sweeter deal.
Yeah, no, that's great. And so what kind of numbers are you getting on the deal now with the money pulled out leveraged against it?
So right now we're collecting $2,700 a month in rent, and our monthly payment is, we haven't had to pay it yet. Our first payment isn't due until December 1st, but I think it's around like $500, $600 a month.
Wow, that's great. That's a great deal. And so, and I think what people need to realize from this, to me, the biggest lesson is that you kind of found a deal by subdividing this deal out and partying it out. So, some people may look at a deal and say, "Oh, I don't want that piece." Well, you can always take that piece and do something else with it. You don't need to, go and do what you're doing, and look at this deal and say, I need this deal and this doesn't fit, so I'm not doing it. So I like the fact that you saw that kind of like, how could I make this work? And, you go that path. So what kind of deals are you looking for now? Are you looking for cash flow deals, appreciation? Like what's in your market that you're looking for?
Well, I recently just closed on a single family home that had like a barn garage behind the house. And so that could be rented out separately. And then it also has a 1-bedroom apartment attached to it. So what I'm looking for right now are value add. So like that apartment wasn't being used at all. It completely needs to be gutted and rehabbed. But I want something that could be sold for, I could easily sell it. Like it's a very nice single family home that didn't need any work. So if I wanted to, I could flip it. Or it would be great for a house hacker if I was just going to sell it. And then the numbers also work for rental income. So I'm looking at things that kind of work for both of those. But I'm also looking at out of state too.
Okay. So just so people understand real quick, can you give people the definition of house hacker? Because I don't know that everybody knows that term. You and I know it, but maybe other listeners don't.
Yeah. So house hacking is when you purchase a property to be your primary residence, and then you're either renting out the other units or you're renting out other rooms and collecting rental income that is paying all, part, or more than what your actual mortgage is. So basically you're trying to live for free and having other people pay your living expenses.
Got it. Okay. So let's talk about, you mentioned maybe doing other, deals or maybe remotely. Are you thinking of going remotely because you're thinking of the deals you want, the strategy doesn't exist there? Is that why you're thinking remote in your area?
Well, in New York State, the landlord tenant laws changed in June of 2019. And they went from like a 3-day notice from eviction to a 14-day notice for eviction. And they just became a lot more tenant friendly. And now since COVID has happened, there's just been a lot of changes that have hurt landlords and have really benefited tenants. Just the fact that haven't had, you can't evict a tenant and haven't been able to since like April, I think. So I actually have one tenant that owes $5,000 and has not paid since March.
Ouch.
And we cannot get them out because of the eviction. Is it
the pandemic? Yeah, the moratorium.
Moratorium. Yeah.
Yeah. And it's
and
unfortunately
property taxes are high too in New York State.
Got it. Okay. So that kind of brings me to my next question. So, you were the host and Joe and myself, and Joe, that won the Dream Investment Adventure. And so you saw he and I working through this process of, he was in North Carolina. Basically, he was stuck on the Marine base. He's a Marine, couldn't leave. And so we did everything remote, did the whole deal. Are you trying to do something like what Joe did, or is that in parallel to what you want to do, or what are you looking to do?
Well, I love to travel, so I like any excuse to go look at a property out of state. But Joe's story is a great example. And everyone has to watch the YouTube series to see exactly how every single step is done with that, because Joe is like one person. He can't go and travel to a state to look at a property. He can't manage the property because did he leave yet, or he's going soon and he's going to be just completely off the grid for so many months?
Yeah, he's already on deployment. So he's gone.
So everything is set up for him and is going to be taken care of while he is gone. I mean, that is like the dream investment to have it set up that way.
Well, and I think the main thing I wanted to enforce in Joe is that he doesn't need to do all of it or any of it really, and he
Yeah.
shouldn't. That's why you have teams. That's why you have realtors. That's why you have lenders. That's why you have property management companies like mine to handle it. And so his job is to be the CEO of that business and have the team members doing it. And the whole concept that I wanted him to learn as we were coaching him through was, I said, I want you to be able to do this in 5 cities at the same time, because it's the same process. His challenge is only going to be finding funding to get the deals. I said that, and I told him, I said, that's going to be your role, is to find funding, and everyone else will be doing their job. And what we're doing here he ended up purchasing in Atlanta. And it was all about creating the mold that is duplicatable. So I told him, I said, just doing this for one deal is great, but that's not the goal. If you want to create wealth, you're only going to do it in multiple numbers, right? You and I know this. Number one. Number two, it's got to be something that you can duplicate without you being involved in. So you got to create that standard operating procedure, which is what he and I created. He used his assets. I mean, he had Mynd involved, asking about rent. What can he rent the property for? Is this a good area? Is this a bad area? And that's using the team. And then it kind of clicked in his head at some point that was what it was about. It wasn't about him doing all this hard work. It was about having the team and the resources, bringing him the information, and then him making the decision. Are you kind of trying to think of the same model for yourself, or how do you plan to do it?
Well, I think it goes back to when you first met me in February and you were coaching me, and like I still remember exactly telling you, well, I like to do the rehab. I like that part. Like I don't want to outsource it. Like I like doing that. You would tell me you're going to get burnt out. You're going to get burnt out. Like at least put the systems in place so when you're done, you can hand it off. And I haven't even like picked up a hammer or anything probably since the beginning of August, and things are still being like taken care of and things are being done. And I used to do my own property management. And so I was very hands-on doing all that. That's outsourced now. You'd be very proud of me. I did SOP for my bookkeeping, and my bookkeeping this week is all being handed over.
Wow, good.
So like, I think as I've like just mostly a lot has been talking with you and learning from you, is that now that I've transitioned my properties at home to pretty much being run passively, it's going to be so much easier for me to go out of state and because my biggest thing is letting go of that control. But with the processes you have taught me and like the things you showed Joe, like you don't have to lose control. You can still know exactly what's happening, but other people are doing the stuff that make it happen.
Yeah, and I think that a lot of times we think that should be our job. For some reason, we get it in our heads that once we own the property, our knowledge and our self-worth is how good we can lay tile, or can we unstop a toilet, or how do we evict a tenant? And all these things, we think that is now our job. And the reality is that was never your job, or really, it never was the intention of why you even bought real estate. You buy real estate to create wealth and give yourself more time. When you do all these things, you're doing the exact opposite of why you even bought the piece of real estate asset in the first place. And I think what scares a lot of people is that when you have to invest out of state, like, you and I have talked about, and Joe and everyone, you have to rely on systems and other people, which is another skill set of leadership that a lot of people would rather roll up their sleeves and do it themselves than have to learn to kind of be humble enough to say, okay, I'm not good at coordinating teams or using management companies, and I don't know what to ask. So instead of looking dumb, I'll just do it myself. And so this forces you to say, okay, I can't go to Atlanta to unstop a toilet or to put the right tenant in. I need to have a team, and the leverage and the concept is that is really the reason why you got into real estate. We cloud it with these other things, but that's not really the reason why we're doing it. And I'm glad that you were able to kind of get that out of that from us talking and all the other things, because it's such a valid point that, it's kind of like motivation only is like a battery. It only lasts so long and it will run down. And when you're dealing with all these problems of daily drama and issues, like you said, I like doing these things. And I said, that's going to go away over time. You are not going to like it. As a matter of fact, you will end up hating it and resenting it. And normally that is actually the reason that you end up leaving real estate, or a lot of people do, is because now they're putting in bad tenants, or the contractor ripped them off, or all these things that they really don't know how to do. This is the part that they feel is their ego and their self-worth, not the their finances to get the property. And, like I've told you, and I told Joe, I said, your job, if I told you your job is to keep buying 5 to 10 properties a year, but you're busy laying tile and painting a room, you're not doing the job that I hired you to do. And the job I hired you to do was to go build 5 or 10 properties. And so it's a big mind shift for a lot of people to have to understand that concept.
And like part of it too is that I did my rehab all last winter. Like I did it completely, me and my partner, everything, and it turned out beautiful. And it's almost like, okay, I did it once, so I know I have that experience. I have that knowledge now. I can oversee contractors a lot better. But like, I don't feel like anymore that I have to be the one doing the work anymore. And it's like a great feeling. But then even with my bookkeeping, I dragged on for so long with outsourcing that because it was like, well, I like to do it. But then it was like, oh, I don't want to like sit down today and actually just go through it. And it was just so much mindset stuff. Like if I give this off, I'm going to have like so much free time. But then panic sets in. It's like, okay, what am I going to do to actually like be successful and like continue to grow my business? Because now I'm busy with the bookkeeping. So I don't have to like really think ahead.
Yeah.
So it's like my midlife crisis.
Well, I don't think you're old enough to have a midlife crisis, maybe a first quarter of your life crisis. But
Steve, I just turned 32 on Monday.
Oh,
this is a big milestone.
You may be getting closer then. You may be getting
I can't fake 30 anymore.
Yes, that's true. That's true. And you know what a lot of people do with this, especially investors, is we self-sabotage, right? So we buy a property, we want to buy more properties, we don't really know what to do. So instead of going to do all these things, we self-sabotage like you may do with the accounting. Go, you know what? They're not doing it correctly. I better go do it myself. Mm-hmm. And so you kind of take it, you have that heroitis where you take that away from them. And now you're doing it again. And you're saying, see, I have to be the one to do it. I don't have time to grow because I've got to do the books. And that's how we kind of feel like we're not doing what we're uncomfortable with. We gravitate back to what we're comfortable with. And, like I said, I've many people that I've helped, and like you as well, it's like, you've got to get comfortable in that uncomfortable zone. And sometimes, using a management company or investing out of state, because like you had said, the properties and the investments you have in your area, they work, but maybe they're not going to get you to your goal. So now you've got to say, okay, now I've got to get uncomfortable. I've got to go into another market, another region. And now I've got to figure out, how do I build the team, which is that is very scary for people to do. And it can be paralyzing to think of all the things you have to do. But, for people that watch the series with Joe and myself, once we did it and we got through it, and I said, so let me ask you, I said, compared to how you thought it was going to be, to actually putting action items in place and carrying out those action items, was it really that bad? And he was like, you know what? It really wasn't. He's like, I don't know what I was scared of the whole time. He's like, everyone is here to help me. And I've been the reason why, maybe I'm not doing it. So I think I'm one last question on this I have is, from you being the host of, the Rookie podcast show, and you've seen a lot of new investors and, you get experienced ones as well. What do you see as the common challenge that people have, especially newer ones?
I don't know about that. I thought you were going to say what's a common thing that they all do that makes them successful.
You thought you knew my question, huh?
Gee, a common challenge. It's probably analysis paralysis and just like taking that first action. There's definitely been a lot of guests who have actually they just do it right ahead and then they go. I don't know. That's a really good question.
Yeah, I would say,
right off the top of my head, I would say the analysis paralysis.
Yeah, I mean, when you think about it, I don't know many investors that say, man, I wish I didn't buy all these properties. I wish I didn't take so much action last year.
Yeah.
Most people that you talk to, they go, I should have done more. Mm-hmm. I should have done as much more. And so, the biggest problem with people taking action is very simple. They don't take action. They just don't do it. And they hide behind the numbers or all these reasons or rationales. That's just what I've seen, where they come up with all these reasons why they're not doing it. And at the end of the day, it's really just them and their negative self-talk that's telling them, I'm not ready, whatever the case may be that they're telling themselves. And I think that once they get past that initial hurdle, they're like, wow, there's going to be some rocky roads. There's going to be some bumps. I mean, that's kind of the sandbox that we play in as investors, that you're dealing with very dynamic. You have a house that, you get an inspection, but you don't know how that house was treated the last 10, 15, 30 years. And then you have a resident that things happen, they get divorced, downsized, they lose their job, they, deployed, whatever the case may be, that you can't plan that. And so these things happen, but to me, it's about surrounding yourself with like-minded people to be able to ask them, like, is this correct? Is this not correct? This is my plan. This is my strategy. Where am I going? And so I think that, I think a lot more people would be more successful. As a little kid, we all do things that nowadays we're like, I cannot believe, like, I did that jump or I did that thing. And because there was no one there to tell us, don't do that. And we didn't know that you shouldn't do that. So we just did it, And so I think it's interesting what we don't know to all of a sudden we're being told all these things we shouldn't do, normally by people that have never done them. They're giving us all this advice and they've never actually done it. They don't own real estate. They don't have rental properties, but they're telling us how to handle rental properties or why we shouldn't buy them. So Ash, with everything going on, in the industry and all this stuff, what are you thinking is going to be the biggest opportunity for 2021? If I was an investor and wanted your advice, what would you say?
Well, if you live in New York State, it would definitely be businesses. We actually found out yesterday that we're going through our second COVID shutdown. Restaurants can no longer have in-person dining. It's select areas throughout our county, but we foresee that it will be more of the county as time goes on. Schools have shut down again. They're going virtual. So, and then some areas, only essential businesses can operate and non-essential has to shut down. So I think and I don't know what this is going to happen with rent again, if there will be, that the non-evictions will be extended or what, but I think there will be a lot of opportunity for actually purchasing businesses because they did not survive this year with all of the shutdowns and stuff like that. So as far as property, I guess it really depends on who actually owns the property. I know that in New York State, they finally did like a rental assistance and mortgage assistance for people. But I think the biggest opportunity will be purchasing restaurants, hair salons, businesses like that, the labeled non-essential.
So are you thinking buying the buildings of the restaurant, the commercial property, and then what are you thinking do with it? Turn it back into a restaurant after this settles, after the dust settles and everything? Is that kind of your thoughts, or flipping the business, or what are you thinking?
Yeah, so my partner and I actually had this discussion yesterday where the 4-unit building that I had bought, we had put the liquor store in that, and that makes that building a lot more valuable to us because we actually have the business in that building. So our idea would be to go in and purchase these commercial buildings. We would love mixed use where it's the residential apartments up top, commercial units downstairs, just because you have two different types of income. So I consider those two different revenue streams. You have the residential income and then you have the commercial income. But then you go ahead and put your own business in there, and that is, a third stream then. What we've looked at is essential businesses. So in New York State, liquor store is considered essential. So even if everything else shuts down, the liquor store remains open. So we didn't open until like a month ago. So we completely missed the first shutdown COVID, but we probably would have made out pretty well being open than I know other liquor stores in the area did. But another example would be a laundromat. So my partner currently owns a laundromat now. So we would open up a laundromat. And it's not really purchasing an existing business. Like I would never want to own a restaurant or hair salon or anything like that. But I would like to take those buildings that maybe didn't survive the COVID shutdowns because the businesses left, the owner couldn't find new tenants or something like that, and put our own businesses in. So the cash cow businesses, I like to call them, laundromats and liquor stores right now are the two that we're focusing on.
Oh, that's good. That's interesting. I never really thought about that, but yeah, that makes sense, especially if you can get something that's considered essential. That's kind of, I'm sure the liquor sales go up quite exponentially high during the shutdown period.
Right. What else is there to do?
What else is there to do? Right. Exactly. Now you're getting into the winter months. So even more so. So that's interesting. Is that your focus, and is that going to be in New York, or is that just all over the country?
Well, I don't really know. A laundromat I would do anywhere, but a liquor store, I don't know. I haven't done any research on the actual laws and stuff in other states, and if you have to live there, blah, blah, blah. I haven't looked at that. And in New York State, you can only own a liquor store if one liquor store. So we could not purchase another liquor store in New York State. It would have to be that, maybe we purchase the building and then a family member or someone else owns the liquor store. But
really, even if you did a franchise, even if you franchised your business, that's still considered multiple liquor stores?
See, there's the huge, Premier, there's huge liquor stores like that have multiple locations. So I'm not sure how they do that.
Huh.
Yeah.
Yeah, I'm kind of bullish on the self-storage industry. I'm looking at getting in a deal with a mutual friend that you and I know, getting into a very large self-storage deal I think this one's in Iowa. But I just think that's, a lot of people, when they're locked down, they got to start moving stuff out and they've got to start putting it places. So I'm thinking that's going to be something that's going to be able to capitalize on and be able to get very solid. It always is a solid revenue stream.
And what did people do during lockdown? They shopped online. Amazon was at everyone's house.
I know I did.
You get more stuff into your house, and then you need somewhere to store the old stuff and put it into storage.
Exactly. Yeah, that's great. Yeah. Well, Ash, thanks. I was, you and I know each other well personally, and so I always enjoy, talking to you and stuff. And you've got so much knowledge, and I think it's great. And then obviously, I know you have 400,000 followers online and everything. But in case somebody doesn't know who the great Ashley Kehr is, how do they find you and talk to you and maybe watch your show and kind of learn more about you?
Well, first of all, I'm only great because I know Steve Rosenberg. So. But you can find me on Instagram.
When you're right, you're right. When you're right, you're right. That's true.
He's going to clip that out and make it his ringtone.
That's right.
So on Instagram, you can find me on @WealthFromRentals. And then I'm also on BiggerPockets. If you just search my name, Ashley Kehr. And then I just started a YouTube channel with our mutual friend, Jason, and it is called Talk It Over, where basically we just interview different investors, and I'm teaching Jason all about real estate investing.
Yeah, that's great. Yeah, I've seen a couple of them. They're good.
Thanks.
It's funny. I know a lot of the people that you've talked to so far. So it's
really?
Yeah. Oh, yeah. Yeah.
Mark. Well, he's a funny guy.
Yeah. Mark Brad's a great guy. He's a good guy. I know him pretty well. But anyways, again, Ashley, thank you, so much for being on the show. And for those of you watching, again, I know we talked about the dream investment adventure with Joe Roberts. Definitely go online, watch it on the BiggerPockets YouTube channel with a collaboration with us at Mynd Property Management and BiggerPockets. We actually have a new episode that's dropping today, this afternoon, I believe 5:30 Central Standard Time. It will come out, and we're going through the process. It's a 9-part series where I'm basically coaching Joe from never even investing out of his area to finding a property, going through some deals that kicked out during due diligence, closing on it, and then we're doing the rehab, getting it rented and everything. So it's a very interesting way to look at watching someone else go through that process if you're curious about it. So again, go on biggerpockets.com. You can also go to our website at mind.co. There we have a landing page and you can see it there as well. So just make sure that you do that if you want to learn. Like I said, there's a lot of people out there. Also, if you do want to talk to us at Mynd Property Management, we are in over 19 investable markets nationwide. So if you're looking to invest, you can see how Joe utilized the resources of Mynd, which was great because he had a couple deals that he was looking at and he ended up not going forward based on the information that he was getting from Mynd of the area, the rent prices, the ratios, and all of that. So again, you want to use a management company, not just to collect the rent, but you want to use them as a resource, a trusted resource. And what's nice about Mynd is you can do that in multiple markets. So if for some reason you want to invest in Atlanta, Las Vegas, Phoenix, Seattle, Houston, Texas, Dallas, all these markets offer different things, and you can utilize Mynd with the same platform, the same software, the same property manager to help you and advise you on different deals based on your goals and based on your strategy. So if you haven't done so, go to our website at mind.co. There you can get all the information you need. If you want to follow me on social media, Rosenberg Steve on Instagram or on Facebook as well. And again, I'm here to help. If you have any questions about Mind, obviously I can help you out with that and direct you to the right people. Well, Ash, thank you so much for being on today. I appreciate it. For those of you watching us, thank you for watching. And we will be back next week on behalf of, who are we? Ashley, Mind, myself, BiggerPockets. It's been a long day. Thank you all for watching, and we will catch you next time. Bye-bye.
Bye, everybody.